All right, we're back. It is March 21st, 2023. Welcome to the New American Realist Show. I have a returning guest, Peter Granage, today with me again. It was a short notice call. He decided to come on today. A lot going on in the world with Janet Yellen and the Fed and everything that we're witnessing happening. So what better guest than Peter to come on for a few minutes to kind of just give us his thoughts on what do you see, Peter, happening now with, is this QE or not? What they're doing with banks?
Well, my biggest concern of the news, which hardly anybody's speaking about, is if you think about what happened at SVB, they lost money investing depositors' money. Okay. And 90 something percent of it was people that had over the current limit of 250. So now we give a blanket, we're covering everything. I'm sitting in a bank, you and I are running the Bank of Arkansas down where you are, right? And we go to ourselves, hey, we need to make some really serious money. Let's take some speculative chances here. And by the way, if it blows up, the Fed's going to bail out our depositors. I think it's opened a Pandora's box for huge, huge difficulty. I'll tell you this much. The bigger issue is, as we're finding out more, a lot of these banks have some serious losses, and they're not being marked to market. And I'm sure the Fed's going to overlook that. Okay. But this has really created something that's in the biggest of pictures, the great credit expansion, the insanity of debt creation that's gone on, not just here in the US, but around the world for decades, has come to an end. When historians look back, they will look at this period and the events that are happening and go, that's when it ends. Things are going to become tighter. It's going to be more difficult for credit. There's a lot of then things offset that people have been using cheap credit to make money that aren't going to be there. It's going to be very difficult. So a much slower economy, whether there's a recession or not, and much more difficult economy to make money in. And that makes the stock market still very pricey because it's still pricing in dramatic growth in earnings, which I don't think is going to happen.
Because you believe this is now inflationary, correct? We talked about in our latest video, you talked about stagflation. We're seeing growth rapidly going backwards and prices going up. And do you remember, I'm sure you remember a lot from the 70s. You lived through 70s. Were you in United States? I assume you were. Can you tell us a little bit with what's happening today, how life was in United States? I was born in 1977 and I was in Europe at the time, so I would not know anything. What was it like in United States? Not that I would have remembered anyways, being a kid at the time. Can you tell us a little bit, what do you see this a lot worse, not as bad, or very similar to going back to the stagflationary, inflationary times back in the 70s?
So in the 70s, around 20 years old, my biggest hero was John Travolta in Saturday Night Fever. I had no knowledge about finances. I was living for Friday and Saturday nights at the disco.
Yep.
And but I do recall it because by the early 80s, I was in the financial business, and the 70s wasn't that long before that.
Mm-hmm.
The difference now is, and it's so hard for average Americans to grasp this because we deal with a financial service industry that mostly thrives on sales, not education. That doesn't make them everybody a bad person. I'm not throwing a blanket over everybody's bad, but for the most part, financial advisors have much more in-depth training on sales than they do some of the things that we're talking about now: inflation, stagflation, et cetera, geopolitics, et cetera.
Mm-hmm.
The difference is back then we were the world's largest creditor nation. And I'll tell you this, I entered the business in 1984. And if we went back in a time capsule and you showed up and said, I'm from the future and I want you to know something, we have 32 trillion with a T debt. We have $1 trillion budget deficits. I would say, I don't know what future you're coming from. You can't have 32 trillion in debt. How's that possible? We don't even have $1 trillion in debt now. So that kind of shows how the credit expansion and what the market really lived off of. And so I don't think the consumer and the investment community is prepared for what's coming because they've basically been weaned on a one-way street. I always use that analogy of driving a car on a one-way street, press on the gas pedal and go. And now it's two-way and a lot of traffic circles. And most of those people that are supposed to be responsible for other people's monies don't have experience or don't want to have an experience. They're still blinded to this. I've watched a couple of people come on television. I don't watch Tout TV. I just don't. CNBC, I don't. And I don't really watch Fox Business anymore because it came a CNBC Junior. But Bloomberg Television has separated itself, especially in the morning. There's a morning show that I still learn from what those people speak about. And I saw a couple of people on there talking like, oh, this is just a walk in the park. We're going to go back to new highs. They remind me of the guys that were saying a year ago, crypto's going to Bitcoin's going to 1 million and just carefree and nobody saying to them, well, how could you justify that? How does it get to that? So I still think that there's a fairly lax attitude right now. That's why we had an up day yesterday. And as you and I speak, we're up again. There's a thing that, hey, Mr. and Mrs. America, it always comes back. So don't worry, be happy. But now the circumstances of this, and we're not even talking about the changes that are happening as fast as our eyes can see overnight geopolitically. We're watching China suddenly doing what the United States always did. Went out, try to solve problems, developing peace, going to the Middle East. The Saudis are now willing to talk to the Iranians again. The Saudis are talking about leaving the dollar, joining the BRIC nations and all. I mean, all these things have impacts on markets, and I don't think the people responsible on the level where retail people are dealing with, I don't think they have the education or the caring to understand what the ramifications are.
When you go back in history, is it true that during inflationary times, tech sector stocks, overall equities, especially tech sector, is it true that it just doesn't do well?
You have to understand that the market that existed in the 70s, 80s, and 90s doesn't really exist anymore. If you don't mind, let me take a couple minutes. This is important.
Yes.
When I entered the business, almost 90% of the trading was retail trading. And it was done on only one or two exchanges, the New York Stock Exchange or the American Stock Exchange. Now, if you do watch Tout TV and you see them sitting at the New York Stock Exchange, that might as well be a museum because most of the trading isn't happening there. It's happening in a bunch of off-site stock exchanges, many of them across the river in New Jersey, where I live. The other things that have changed is people bought stocks to be part owners of businesses back then. There are people now that are using quantitative trading and all sorts of computer systems. They might not even know the name of the companies that make up whatever they're buying and selling or the name of the CEO and don't care. It's a sophisticated gambling process. So the markets are really different than back then. So a lot of things you just can't grab from back then and say it's going to be the same here. I will tell you this. The technology run early part of this year is understandable. It was the thing that got crushed. Do you know how many people? I mean, the lady that runs the ARK fund, she was down 70% from her highs. And trust me, most of the people that bought at the highs were retail people. They weren't institutional people. And so, I think you even used it when I put it out. I have a saying and I stole it from somebody. The elite get bailed out, the poor get handouts, and the working stiffs, me and you, pay the bill. And now we're getting even a bigger bill.
Incredible. Peter, do you think that we are going into bartering system between the working people, like I said, me and you? And the reason I ask you this is because I was recently on a Maneko video on the call. I don't know if you listen to him. He's an ex-banker. He's from London, a very big following base on Twitter and YouTube. Okay. And a gentleman from Oklahoma heard the video. He's been following Maneko for a long time now. And he contacted our farm and was interested in, would I take an ounce of gold, physical gold, for 200 pounds of beef. We actually did another video based on this because Mario Maneko, that's his channel from London. How crazy, right? How world is so small. That was all this transaction ended up actually taking place. And I just wanted to see if it would work out with this gentleman actually showed up, drove from Oklahoma to Arkansas to our ranch here. And we ended up bartering with beef for gold. And do you think this is where United States is heading now, or this was just a fluke deal that happened, or do you see this coming up?
Well, you did barter, but it really isn't what happens on normal barter exchanges. And let me explain the difference, because at one time I was very involved in barter. What you simply did is just a one-on-one trade. Instead of taking his cash, you took something else that you valued what was equal for your product. And for both of you thought you were getting the
Yeah,
best of the deal. It
exactly.
is barter because in a sense, but it still involved a monetary item. It wasn't like he said to you, I'm going to give you my car or my vacation home for 3 weeks in exchange for you giving me beef. That's more of a barter sense. Barter exchanges is where a bunch of businesses join it. The argument in barter was, hey, you got a hotel? How many times rooms aren't occupied? You once it goes that night, you lost that sale. You can't use it again. Same thing with a car repair guy. No one's on the lift. 2 hours go by. That's 2 hours you lost. So if somebody comes in and willing to barter with you because they're part of this exchange you join, and then you get his or her barter dollars, then you go out to the person that sells feed because they're in the barter exchange. But what happens in barter exchanges sometimes is certain type of people get overrun. Most of the people in the restaurant, everybody goes to the restaurant and all, and then the restaurant owner has so many barter dollars, he or she can't find a way to sell them back. That's why barter has never gone past some local regional exchanges and all. But in tougher times, that's where they see growth. And if I'm right about tougher times, there will be, to answer your question, more bartering than used to be.
Yeah, and you explained it. You said something very interesting. You said, well, in this case, you basically use something as a monetary system, which is gold. Gold is money. I didn't use it, obviously. I was the one receiving gold, and the other person received beef. Like you said, for both of us, it made sense at the time. I just was just interested, would it work? And I said, no, I'll take an ounce of gold. I'm good. Um, so it was more as gold is money, basically. It comes down to it. Instead of, like you
Well,
said,
there are countries now doing that. We're watching countries exchange oil for items, things of that nature. Again, moving away from dollar-based ways of paying for things. That not only do I believe the dollar has peaked from a technical standpoint, price wise, I believe it's peaked long ago and it's been deteriorating as the leading currency. And sooner than later, we'll learn of more bigger regional trading that will involve either a new monetary system or at least a new way that they can trade without using the dollar. People do not like America the way they liked it 20, 30, 40 years ago. And the guy that's currently occupying the White House has not done anywhere of a decent job in anything that involves geopolitics. So he's only made it worse than it was before.
I agree 100% on that too, and everything that you said. Just got two more questions. I'm going to look in a minute on the Twitter I posted just a little bit ago, because we came in on a short time here. If people had any questions for you, so I'll look at that before we finish. But I just wanted to ask you just one more question from my side. What is your advice? I'm not a financial advisor, but what is your advice to regular people right now, meaning those that go to work 9 to 5, whether it's from home or working class people? What can they do right now to protect themselves with all this that's happening?
So I'm part of a planning group uh, that works for retirement planning, estate planning, and business exiting. And it's been our argument for quite a while that traditional financial planning doesn't work, and people realize that. All you have to do is read that disclaimer. You can see they've already covered themselves for falling short and not reaching their goals. But this is extraordinary times now. We have almost 3/4 of America working paycheck to paycheck. And of those people, they've had to resort to use credit cards to pay for necessities, not luxuries. And the father or mother says, listen, I got to put food on the table. I'll worry about how I'm going to pay it later. Okay. We're seeing now significant trouble in the car industry. Not only are people falling back on their car loan payments, but a lot of people called upside down, which means they owe more than their car is worth because they were taking these 5, 6, 7 year car loans to get a car. A lot of the traditional things that people count on in every day has become far more challenging. We're not even talking about how the heck are they going to retire it if they can't even pay for food right now and they got to use credit. But the big thing now, this bailout, and they can call it whatever they want, they were bailed out. Listen, that's the risk you took. That's why there was only that insurance, okay? But it was the elite, like I said, and that's what happened. And now, of course, when they start to see people just, I mean, banks were seeing tremendous deposits withdrawn, running to the big ones, thinking somehow they won't let them go down. I'll just tell you this. I knew when we finished up Friday in gold, and I said over the weekend that we were going to have a pullback. There were a lot of reasons. We were terribly overbought. We got up to key resistance. It was a huge move. We were just near 1,800 a couple of weeks ago. But I can tell you this, more people, if they haven't already, are going to start to look as an alternative than putting their money in the bank. And that, I think, is now going to be an added factor to be bullish on gold. This banking crisis, maybe not today and maybe not tomorrow, and maybe not just here in the United States, but around the world, people are going to seek an alternative to paper currency because they see what happens. And they're going to say to themselves, I want to own something that if I drop it, I hurt my foot. You know, and it's going to be some sort of hard asset, and gold and silver are clearly the ones doing it. This was a very, very changing bullish factor for gold and silver past these couple of days, but now out into the future. And this is what's going to finally get us to break out of this 12-year cup and handle formation, this triple top that's been up in this area. We're going to see serious inflow to physical bullion. The paper market hangers that like to manipulate it are going to be overrun finally. You know, they deserve it. I like to stomp on them a little bit myself. But the bottom line is this has been a very, very bullish move for the gold market.
Thank you. And that's perfectly leads into this question that silver bag filler from Twitter. What is Pete's time frame for holding juniors? Does he usually opt for attractive takeover candidates rather than go it alones? This is from Silverbag Filler.
So let me just quickly say that silver is actually showing better relative strength now and may actually lead the next move up, which not normally happens, not normally here for me. I literally just put out a half hour ago a video about entitled, Is the Junior Resource Market Terminally Ill? And what I would suggest is if you put it up on yours so the people that are following you can see it, I discuss why it's much tougher now in the junior market than it was for me 10, 20, or 30 years ago when I worked in it. I gave the various reasons. People can look at the video. I will say that if you can get past my two big rules there that are absolutely necessary to follow 100%, the junior resource market now is the cheapest it's ever been relative to what the underlying metal price is selling for and historically. The challenges are it's much more difficult for junior resource companies for a variety of reasons that I speak about in the video. The key to understand in that business is management because it's always a business that's looking for money to grow. And so a management that can best promote itself, people think it's a terrible word. No, it's a necessity word in the junior resource market. And people who know how to pay for the right time to buy projects, merge, et cetera, et cetera. Because we're going to see in the next few weeks, at least, if not over several months, a lot of mergers and juniors out of necessity. There's too many of them that are too low on capital, and the market's just not there. And I don't think it will be there for a while, where a lot of money for financing is going to come. But after that, and those get out of the way, I really think the junior market could have a tremendous run perhaps unlike anything that's ever happened in it before.
So you are, I just looked up, actually popped up on my phone that you posted 2 videos. I follow Peter on Twitter and YouTube. It's just at Peter Granage Company. It's Peter Granage. So PGC, Peter Granage Company. And you posted.
Yeah, it's on Twitter, just at Peter Grandich, go to.
And
Or if you put my name in a YouTube search, you'll come up with the latest video.
yes, and you have a lot of guests on your show that are a really good junior mining. What is the Michael Gentile? Is that how you pronounce his last name? Because I
Well,
those.
yeah. Michael Gentili, to me, is the next Eric Sprott, if he wants to be. I think because of his faith and all, he doesn't necessarily want to become a billionaire or a multi-billionaire, but he's well on his way. And he's the brightest, most highest integrity, and most faithful man, which you never get all those combinations together
No,
that
very
I've ever met.
yeah.
And he's just able to identify things before the crowd. And there's an old saying, and people should understand this because I think they become too short-term oriented in the junior market. You'd rather be a year too early than a day too late. Like lithium, several weeks ago, I said it's too late, and it still went up. Some people blew up. It suddenly came down. That market has had its real success. There still be some, and et cetera, et cetera. You have to look at things now that at first you think are going to be discovered and so forth and so on. And Michael Gentili is extremely skillful at that.
Yeah, and I've seen he wasn't just once or twice on your channel. I listened to him. I don't know if I think he was on Kitco News as well, and he's been on other channels.
Yeah, yeah, he's decided to back off from that because him and two friends, he was a money manager for a lot of years in Canada. He went back into it. Plus, he's a huge investor, probably in 15 to 20 juniors, maybe 5 of them he sits on their boards. Plus, he has 5 daughters, and 2 of them are twins. So he likes me because he knows we get along, and he comes on and every so often, and he lets me speak to him about what's his latest thoughts are and all. I learned a long time ago I was never going to be the smartest, second smartest, or third smartest person. But if I can identify who they are and ride their coattail, I'll be okay. And I think anybody that rides Michael Gentili's coattail is going to do okay.
All right, will do. I can't leave you until I ask you because of tomorrow. I just remembered this question I asked you last time. Is the Fed going to pause tomorrow? Are they going to go 25 or 50 basis points, or they're going to cut? What does Peter think? Last question, I promise.
Sure. Oh, you can ask more. They're not cutting. They're
Okay.
definitely not cutting. Cutting would be a disaster for them.
Okay.
Because the market went up on Monday and Tuesday and there's relative calm compared to the end of last week and over the weekend, I think they'll be more encouraged to do a 0.25 for this reason. Hey, we show that we still said what we meant about inflation and all. It's probably not going to be enough to send this thing back into a tailspin again. And then follow up with wording in the conference and all about how now we're going to sit back and see over the coming weeks what's going to happen. And then they're going to go in their room and go, pray to God, please let inflation be lower over the next month, not higher, because we really don't want to raise again. Really don't want to see rates going up to the level that they thought of, because too many banks now are sitting with too many paper losses on treasuries and things of that nature. And it'll hurt more doing that than any inflation could hurt. So get used to, we're not going to see 2% again inflation. We're probably going to start to bottom out between 4 and 5. And that will mean that real interest rates will become very, very attractive for gold again. This is really setting up to be a wonderful momentum thing that's finally going to get us through the 2000. And if you look at that cup and handle formation, it's been for 12 years. When you break through it, you can get all sorts of targets at 3,000, 3,500. There was a guy on saying 5,000. I said, listen, get to 2,500 first, then we'll look at 5,000.
That's right. That's right. And that is one of the most beautiful cup and handles that I've ever seen. I mean, it cannot look any more. And it's for gold and silver, both. I
And silver. Yes.
Yeah, it is
Yes.
amazing. Like it is, I'll post some charts here because I have a lot of those that I saved up. And obviously, the last 2 years hasn't been fun for those that, including myself, to watch your, precious metals equities portfolio going down. But I never worried. I added to my positions. I believe what I believe in. That's how I've been my whole life, and I just stick with it. I like the macro. I like to, put all things into perspective. I like to hear people talking about Bitcoin as well and everything else. I like to see the people people thinking, well, no, they're going to raise to 50 basis points. They can't stop. They will stop. I put it all together and then come up with my own 2 cents at the end. That's why I think it's great to think for ourselves instead of just listening to one person and then going and not listening to yourself.
Let me just close with this, that it's very important for people to start to understand geopolitics. Not only the politics here in the US, but this is important. If this Biden investigation gets legs and it starts to show where even the left side of the media can't avoid to say, wow, these guys were really what the Republicans are claiming, it's true. The market hasn't begun to price in a president that's in turmoil, especially since if for some reason you start thinking, well, he has to be removed as president, who takes his place? I mean, that would be just, it may be one of the worst things that ever happened in the United States, quite frankly. Not that I want Biden to stay there personally, to be honest with you, but if his vice president had to come president, man, if I was China, I just say time to put the pedal to the metal here because she's not going to be able to handle this and all.
Yeah,
So
we
anyway, geopolitics is very critical. There's a lot of things happening. What China is doing now, what countries are doing, not involving the United States. A lot of this has to do how we left our allies to fend for themselves in Afghanistan. Uh, he went over to Saudi Arabia like this, and he told them that you got to basically cut oil. That stuff all backfired. It's only made things worse for America. So make sure you follow or somebody that understands geopolitics. Start reading those people online because it's going to play a role in your investments here.
Yeah, we truly are living in crazy times. What do some people call it? Murphy's Law. What can go wrong will go wrong. And we are watching all of this just happening at once. It's just crazy. But I can talk to you, Peter, honestly, all day long. I will be respectful of your time. And maybe we'll revisit in a couple of months again and see what happens. So Peter is calling for 25 basis points hike. I've been calling for pause for a while. I'm going to stick with it, even though now with the markets, like you said, being a little bit in the green again last couple of days, I think you might be right on that. So we'll see. Thank you so much again,
And
Peter.
you don't have to wait a couple of months. If something's happening and I'm available, I'll be glad to come on with you.
Well, I'll definitely then take you up on that one, and then we will talk soon. Thank you so much again.
You're welcome. God bless.
God bless.